Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, March 15, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. Yet the US dollar index down minus 0.3% last week, but is currently signaling bullish on a 15-day duration, but bearish on a 90-day trend duration, which may be indicative of a potential phase transition or breakdown in trend from bearish to bullish, or perhaps some consolidation. You're seeing similarly in the euro versus the US dollar, which was up 0.3% last week, a divergence in the signal from bearish on a 15-day to bullish on a 90-day trend duration. The yen, however, continues to remain bearish on a 90-day trend duration as it was down another minus 0.6% versus the US dollar. And then you have the British pound versus the US dollar up another 0.6% last week to now plus 5.3% in the last 3 months as it continues to signal bullish on a 90-day trend duration. As far as inflation acceleration is concerned, you're seeing commodities continue their reflation higher, with the CRB index inflated 0.2% last week to now plus 4.6% and 20.2% in the last 1 and 3 months alone. Breaking that down further in WTI oil, that corrected minus 0.7% last week, taking its 1 and 3 month inflation down to 10.5 and 39.7%. Copper similarly continues its inflation higher, plus 1.6% last week to now plus 9.3 and 17.1% in the last 1 and 3 months alone. And just touching on something in the meats, in hogs, you have that inflate another 3.7% last week to now plus 1 to 7.7% and 25.5% on the last 1 and 3 month gain respectively. As far as linear economic readings, such as break-evens and tip yields, you see U.S. 10-year break-evens, those were up 4 basis points, now plus 2.28%, up 40 basis points in the last 3 months. The U.S. 10-year tips yield was up 4 basis points to minus 0.62%, taking its 3-month acceleration out of 35 basis points in the last 3 months. And then you have the 10-year yield up another 6 basis points to a new cycle high of 1.62% just last week. Moving along to global equities here, you're seeing a divergence in something like China, which just broke down in trend with the Shanghai comp, and just in the overnight down another 1.0% to now minus 6.4% in the last month alone. European equities have continued to outperform. If you take a look at something like Russia, that was up another 5.0% last week to now plus 3.9 and 7.5% the last 1 and 3 months alone. And you have German stocks up 4.2% last week to now plus 3.2 and 10.6% last 1 and 3 months alone. And just touching on Swedish stocks here, those were up another 5.1% last week to now plus 5.3 and 14.3% in the last 1 and 3 months alone. So clearly the takeaway here is the narrative about global rates rising, being bearish for all global equities, was a false narrative. And so if you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.